There are many things in life that you need to know to survive. How to brush your teeth, setting an alarm clock, driving a car, but some things you learn on your own or are surprised by as you get older. One piece that somehow gets left off the list of things you need to know is the FICO Score and report. In 1956, two men created an equation for calculating how creditworthy someone is called the FICO Score. The score is made up of inputs like available debt, total debt, to how much more credit someone has access to, things like payment history. It ranges from 300 at the low end to 850 on the high end. The FICO Score is one of the first things, or sometimes the only thing, organizations like banks use to better understand your credit worthiness, or in normal language, your financial history and your ability to pay them back. The higher your score, the better your options are for the cost of your money and how much money you can access. Anything between 780 and 850 is excellent, and 720 to 780 is still good. 650 to 720 is average or okay, and anything less than 650 is considered not so good and referred to as subprime. So why does an entrepreneur or anyone need to care about their FICO Score and history? When you apply for a loan, you want to know how you'll be seen by the other side. Would you go out on a date without looking in the mirror? That's what your FICO and credit report is. It's how you look as a borrower. Oh, that's so superficial, you think. Lenders wouldn't just judge a book by its cover, would they? Won't they look at the real you? Many lenders look at your credit score and history as the real you. It is a measurement of character in many ways. So your FICO and credit score matters a lot to them. You need to know ahead of time so you have realistic expectations, and if you ever have a chance at a loan or a financial product. So here's an example. Say you're wanting a business loan, the lender will ask one or all of the credit bureaus for your score. If you have an excellent credit score, then you might get a low interest rate and you'll probably get the loan. If you have a good credit score, you'll get the loan, but it'll be a slightly higher interest rate. But if you have a really bad credit score, you're probably not going to get the loan at all. If they provide the loan, the lender will report on your loan amount and your repayment to the bureau. So we suggest before you apply or submit for financing for any business transaction, especially a loan, purchase your FICO Score and credit report. You can buy it from any of the 3 credit bureaus. They're called TransUnion, Experian, and Equifax. Or you can buy the score and report from the FICO company itself at myfico.com. By the way, all 4 of these vendors will try to convince you to purchase some expensive monthly monitoring thing. Ignore them and just buy your FICO Score and credit report once. I don't work for them, and you don't want to overpay, but this $20 purchase is well worth it. Seriously, it will place you in the driver's seat. The FICO Score is calculated by 5 elements, and the score can always change. So if your score is on the lower side, you can take steps to improve it, like paying your bills on time. However, if your score is on the higher side and you have a few slip-ups, like late payment to a creditor, you can drop your score. The 5 elements that make up your FICO Score are the length of your credit history. That's 15%, and it looks at how long you've had credit. Some folks have very limited credit history, such as someone who's young or a newly arrived immigrant. A longer time raises your score, while a shorter time lowers your score. Types of credit is 10%, and that looks at what is your credit blend. Is it all rentals, or do you have a mix of credit card, car loan, and a house loan? FICO considers some types of credit-link installment loans riskier than other types like mortgage loans and adjusts your score as a result. Credit inquiries make up 10%, and this element is a list of organizations who have pulled your credit score and how long ago and how often. Have you applied or recently for credit? This lowers your score a bit as it shows you need to borrow money, which seems kind of mean because of course you're looking to borrow money, but there it is. Payment history is big in the credit score. It makes up 35% of the score, and any movement, positive or negative, changes the score. Have you ever missed debt payments, and if so, how often and how recently? Missed or late payments hurt your score, while the perfect history of paying your debts boosts your score. Total owed is 30% of your score, and this looks at how much flexibility you have to pay and how much more debt you're able to take on. How much do you owe now? High debts you owe now can lower your score. Owing a small amount compared to your available credit, however, can actually raise your score. The last two are drivers by you, and they are linked together. If you pay on time for everything, that means you pay what you owe, and you have the potential to add more debt. If you aren't paying on time, it also indicates that you may be overextended. When you take all of these 5 things into account, the biggest takeaways are these. First, time is a huge factor in your score. You can't have perfect credit as a very young person because you will not have had a long enough time to boost your score. Also, if you've had problems paying your bills in your recent past, it takes years, not months, for your FICO score to recover fully. If you're planning to borrow money soon for your business and you know your credit has dings on it, be prepared for a slow road to borrow anything or borrowing much from a lender. Second, there are no useful tricks to boosting your FICO in the short run. Paying your bills on time, lowering your balances when you can, building up a long-term track record of safe borrowing behavior is the only reliable method. And not paying that $70 phone bill could prevent you from borrowing the $7,000 you need to start your business, if it drops your score. It's important for you to know what the FICO score doesn't measure. Here's what the FICO score doesn't do. It doesn't count your income. It doesn't know your gender. It doesn't report your race. It has no idea how wealthy you are, how much savings you have, who your friends are, or whether you have a job or not. All FICO counts is past behavior with paying your debts. In that sense, the FICO is a number that's quite fair for lenders to evaluate you with. Congratulations! You've completed the lesson in credit scores. To test what you've learned, click on the link at the end of this video or the link that says Quiz Me under the Credit Scores tab.